REITs, healthcare REITs have been dominating the senior care market for a while now, and a lot of the focus has been on the large cap healthcare REITs, but there are some smaller REITs that are getting very active these days. And I'm here today with Wendy Simpson. She's the president and CEO of LTC Properties, which has been a publicly traded REIT for quite a while. And you know, this is really looking like it's going to be the decade of the REITs. I'm sure you hope it's going to be lasting through the decade. And LTC Properties has become a lot more active in the past couple of years. What's changed for you all?
Our cost of capital and the fact that there's a lot of investment cash available, whether it's bank financing. Banks are giving us large lines of credit with good terms, a good term line. We've got 4 years now, and you used to be able to get 1 or 2 years, and so you have some confidence that that bank availability is going to be there. The capital markets are open for the REIT sector. So, and the Fed has taken rates down to almost zero, and so the cost of capital has just become low enough for us to be able to make some accretive investments.
And your portfolio is, at least on the property-wise, not bed and units-wise, but your portfolio is pretty even on assisted living and skilled nursing. Is there one sector or the other that you're targeting now, or?
We're not targeting either of them. We would like to have more assisted living because for the last couple of years our successes in acquisitions have been primarily in the skilled nursing area. The assisted living assets are still being pretty heavily competitively bid, and so the cost per unit on the assisted living properties, you really have to have maybe a cap rate of 6 or 7 before you can make any money or really buy some of the properties. So we do look at the smaller assisted living packages, but if there's a large assisted living package, we know it's going to be bid up either by the larger REITs or some private capital has come into the market and buying some of those. So while we would like to keep our portfolio 50-50, right now we see that we have more opportunity in the skilled. We're not going to not take advantage of an opportunity just to keep that 50-50, but we do have interest in assisted living, and so we are looking at it.
But historically, LTC has always seemed more comfortable in more of the middle market, whether it's skilled nursing or assisted living facility. But you very recently did a sale-leaseback for 2 very new, very expensive skilled nursing facilities. Now, I assume that these are very high managed care, Medicare properties. Is that going to be a target that you're looking for, getting into much more of the higher acuity, subacute rehab type SNF?
We see that as the growth area for the skilled nursing now. There's more, as the baby boomers become more of the patient classification, they can drive more of where they're going to go for their rehab, and the newer properties are getting the higher acuity patients out of the hospitals, and so the newer properties, we're very focused on investing in the newer properties, the higher acuity type of properties. The 2 that we bought in Ohio are just they're just stellar properties, and while you do have a little bit of a gasp at a per unit price, just to see their mix, the type of building it is, the location, it almost looks like an assisted living. So we also have been looking at some properties that we would buy to close and build a new one. So there are other things that we're looking at in terms of, we would like our portfolio to, as an average age, go down, and so we are really thinking about that and looking at properties that are of a newer quality.
And then with your recent acquisition activity, are you still comfortable with the onesie-twosies? Is that going to be more your priority? Are you looking for smallish, 5 property portfolios? Any target in that area?
If the portfolio gets big enough, then it's competitively bid again, and we don't tend to want to get into a competitive bidding process. So in the onesie twosies, what we're seeing is an opportunity to buy a property from an individual owner, and there's still, I'm always surprised at how many there are still out there. And generally, we're going to bring in an operator that we've already got other properties with. So while it might be a one property purchase, it's going to be with an operator that we probably have a couple more properties with and can go into a master lease. So I don't see us right now, and I'm going through the things that we're working on, buying a property from an owner-operator and leasing it back to that individual owner-operator. We'd like more tie-in in terms of security on acquisitions.
Security in terms of?
A bigger base of assets to pay the rent and for the coverage.
So does that mean, are you kind of looking more towards expanding your existing relationships, or if you go into a new relationship, you want to be larger than a onesie-twosie?
Yes, both.
Okay.
We're cognizant of the concentration. So when we have an opportunity with some of our operators that we have a large concentration of skilled nursing, for instance, one of the factors that we look at is, you know, how is the market going to evaluate this in terms of more investment in this single basket. Mm-hmm. So we really do support our operators and want to do more business with them, but to a point that we don't want one of them to become so important to us that causes a concern.
Right. Well, because the whole trend with the larger REITs is, you know, they want to be the exclusive REIT for people, and so you don't. It sounds like you don't want to have that much concentration.
Correct.
Okay. All right. And, you know, a few of the REITs have done, they call them the RIDEA transaction, mm-hmm. even though you don't need that particular act of Congress to set these up this way, but everyone refers to them that. But people are doing RIDEA transactions to obtain, you know, a higher yield than just a lease with the 2.5% escalators. Are you thinking about doing that down the road with either existing or new customers?
We've looked at it a couple of times. In underwriting it, we haven't quite understood how you use a REIT yield to value an operating risk. So we really haven't been able to work out the numbers in any of the deals that we've been looking at. A small RIDEA would be something we might do in the right strategic situation, but we currently don't have the overhead to manage a management type of situation. So it's not one of our strategies, but 5 years ago I would have said, no, we're never going to do that because of the, you know, we are an owner operator, or we are the owner, leaser, lessor, and you don't want to get into operations. But it does seem to be somewhat accepted in our industry now, and so I'm not going to discount it right out of hand anymore. But we're not. It's not a strategy that we're spending a lot of time on.
Right. 5 years ago, not possible today.
Possible.
Who knows?
Yes.
Who knows? And, you know, I mean, as you've proven with your recent acquisition, you know, new skilled nursing facilities in good markets can be extremely valuable.
Yes.
I mean, high cash flow, just, you know, kind of the new model for, I think, for the sector. Does that mean, would you be doing any new, you know, much new construction for skilled nursing? You said you would buy an old one, tear it down, and build a replacement. Are you looking at doing more construction? We are.
We are actually doing one, which is a replacement of a property. It's under construction right now in Amarillo, Texas. We're talking to another operator about just building new. They've got CONs in a CON state. Just building new property, 2 new properties. We're also talking to another operator about buying, like I said, an older property, closing it down, and building a new one. So we're also building, we're under contract and under construction in one memory care in Littleton, Colorado. That's currently, earth's moving and things are being stuck in the ground. And then we're talking to 2 other operators of memory care about building de novo projects in 2 different states. So we're very interested in building in the memory care area. These buildings that we're looking at, the profile of the buildings are the smaller buildings, 40 to 60 units, and the price, including land in the areas that we're looking, is somewhere in the $10 to $12 million category. So it's a good bite for us. And so we are looking to do some building in the memory care, which will, in the future, give us more private pay,
Right.
which is backfilling for the fact that we're not buying assisted living now.
Right.
So, you know, that's one area that we're looking at in addition to the acute care, the skilled nursing building.
Well, good luck in 2013. I hope you can build on all the new activity in 2012.
Thanks.
All right, thanks for sitting down with me.
You're welcome.